Some of the richest people on earth pay a lower tax rate than your teacher. Legally. On purpose. In 2021, ProPublica got the actual IRS files of the richest Americans and did the math. The 25 richest paid a true tax rate of about 3.4% on how much richer they got. 3.4. You probably pay more than that on a coffee. And the wild part? Nobody broke the law. They used a strategy with a name, a strategy a law professor literally called buy, borrow, die. It's 3 moves, and once you see it, you can't unsee it. Here's the thing that breaks people's brains. You and a billionaire are taxed on completely different things. You get taxed on income, the money that hits your paycheck. It's gone before you even see it. But the ultra-rich don't really have a paycheck. Their wealth is in stuff they own, company stock mostly. And here's the magic rule. In America, your assets going up in value isn't income. If you own a stock that triples, the government taxes you nothing. Not until you sell it. That's called the realization rule. Gains only count when you realize them by selling. So if a founder's stock goes up $40 billion this year, his taxable income from that can be 0. He got way richer and owes nothing because on paper he didn't make anything. That's not a trick yet. That's just step 0. The trick is what they do next. This isn't a vibes rant. The numbers are from ProPublica's reporting on real IRS data, and the strategy was named and explained by USC law professor Edward McCaffrey. 3 moves. Let's walk through them. Move 1 is simple: own assets that go up and refuse to sell them. Because remember the rule, selling is the only thing that triggers the tax. So the entire game is, don't sell. Hold the stock forever. Let it compound. But wait, if they never sell, how do they live? How do they buy the mansion, the jet, the island? You can't swipe a debit card made of Amazon stock. This is where everyone assumes they must finally sell something and pay up. Nope. That assumption is exactly the trap. Because there's a way to turn stock into spendable cash without selling it, which means without ever triggering the tax. And that's move 2. Move 2. Instead of selling your stock, you borrow against it. Here's the cheat code. A loan is not income. When the bank hands you $1 million in loan money, you don't pay income tax on it, because you have to pay it back, so it's not earnings. So a billionaire walks into a bank, says, "I've got $10 billion in stock." And the bank says, "Cool. Here's a low-interest loan against it. Go nuts." They get millions in cash to spend, the stock never gets sold, and the tax bill is 0. They live like kings on borrowed money, secured by assets they never touch. The interest rate is tiny because the bank knows the stock is good collateral, often cheaper than the tax they'd owe if they sold. Read that again. It can literally be cheaper to borrow than to pay tax. That's why this isn't fringe. It's standard operating procedure at the top. But there's still one loose end. Someday they die. Doesn't the bill finally come due? This is the part that sounds made up. It's move 3, die. When someone dies and passes assets to their heirs, there's a rule called stepped-up basis. Here's what it does. The heir's cost for those assets gets reset to the value on the day they inherit them. So imagine grandpa bought stock for $1. It's now worth $1,000. That's $999 of gains that were never taxed. All those years of don't sell. Grandpa dies, leaves it to his kid. Normally the kid would owe tax on that $999 gain when they sell, right? Nope. Stepped-up basis resets the cost to $1,000. The gain doesn't get taxed later, it gets erased. Forever. The kid can sell the next day and owe basically nothing. So put it together. They bought and never sold, no tax. Borrowed to spend, no tax. And at death the lifetime of gains gets wiped clean, no tax. The loan gets paid off by the estate and the gains just evaporate. Buy, borrow, D. The tax bill never arrives. Now, here's where I have to be straight with you, because the angry version isn't the whole truth. First, none of this is illegal. It's not fraud. It's not a secret crime. It's the tax code working exactly as written. The system taxes realized income, not wealth, and these moves just live in that gap. Second, there is a backstop, the estate tax, up to 40% on big estates. But here's the catch, armies of lawyers shrink it with trusts and structures, so the effective rate the very richest pay is way below 40. And okay, just tax unrealized gains. People propose exactly that. Senator Wyden's Billionaires income tax, the Biden minimum tax plan. But it's genuinely hard. How do you value stuff that doesn't have a clear price, like a private company or art? What if the asset drops next year? Does the government refund you? And the Supreme Court just poked at whether taxing unrealized gains is even constitutional. Moore versus United States, 2024. So this isn't obviously evil people doing crimes. It's a real structural gap with real hard trade-offs to closing it. Both things are true. You're probably not borrowing against a $10 billion stockpile. So what's the takeaway besides rich people? Ugh. The real lesson is the principle underneath it. Wealth that you own and don't sell is taxed far more gently than wages you work for. That's the whole game. Owners are taxed on a delay, workers are taxed instantly. You can't pull off buy, borrow, die, but you can move yourself even a little from the earn column toward the own column, own assets, hold them, let gains compound untaxed until you sell. That's not a loophole. That's the same realization rule working for you this time. The tax code rewards owning over earning. The rich just run that fact at God mode. The least you can do is run it at all. So that's how the richest people legally pay almost nothing. They buy and never sell, so there's no gain to tax. They borrow against it because loans aren't income. And they die where stepped-up basis erases the gains for good. The one idea to keep: America taxes income, not wealth, so the people whose money is wealth barely get taxed at all. It's not a crime. It's a design choice, and now you can see it. If this made the whole thing click, subscribe, honest version, both sides, real numbers. See you next one.